In the energy quadrant, taking a look at the June crude oil contract today, which came off of the lows down 1.91% on the low in that June contract today, getting below $64 a barrel. 63.68 was that low, and then getting back up to 65.48 on the upside. That was up 86 basis points. Current prices in crude oil are stable despite that major pipeline outage. We actually moved from down 1.91% to up 0.86%, finishing the day up about 0.75%. So it's a pretty big turnaround. And again, despite the Colonial Pipeline situation, still not fully functional. They're operating part of the pipeline manually, but it's not really affecting crude oil. And it makes sense that it wouldn't, because we already had refinery utilization down below 90 for quite some time. The refineries can still bring that crude oil in, turn it into product, and wait for this situation to turn around. So we're not really seeing this affect the price of crude oil just yet. Now, maybe the OPEC report today affected the price of crude oil a little bit. OPEC is optimistic about returning demand, and they expressed it in their closely watched monthly oil market report that they released today. They talked about accelerating vaccination programs and rising fuel demand, raising global oil demand by 5.95 million barrels per day this year, despite the current crisis in India, and India being the third largest consumer in the world of crude oil. Most analysts think, though, you can't really get to where OPEC sees us getting in terms of oil demand without a sort of rejuvenation of travel, specifically international travel, which still isn't open, like London-New York corridor still is not officially open. So without that coming back, fuel demand is going to continue to depress prices a little bit. But once it does, that could be the spike that maybe OPEC is looking for to release the floodgates on supply. Now, speaking of supply, inventories might actually begin to build if the Colonial Pipeline situation goes on for much longer. As I mentioned, we had an 86 handle on refinery utilization last week. We're getting the EIA data tomorrow along with a new refinery utilization figure. And that figure might actually spike a little bit because oil is still moving to refineries, but the whole East Coast, some 4 to 4.5 million barrels of refined product, isn't getting that product. So it could start to pile up both on the gasoline side, and then they might slow down the refining of crude oil. Speaking of that, RBOB prices are stable as well, even though prices at the pump on the Southeast and the East Coast have started to rise a little bit because of shortages. So it's a very fluid situation, but not really affecting the price of crude oil yet. I think it was more that OPEC report that got crude oil up off the lows today.